Internet capital markets, often abbreviated as ICM, represent a significant shift in how new ventures, particularly in the crypto space, can secure funding. This innovative approach leverages the power of blockchain technology and the wide reach of online social platforms to connect startups directly with a global pool of potential investors. Unlike traditional fundraising methods that often involve lengthy processes, gatekeepers like venture capitalists and geographical limitations, ICM aims to be more open, transparent, and efficient. It allows projects to present their ideas and visions to a broad audience, inviting participation from anyone with an internet connection and an interest in the emerging digital economy. This method is rapidly gaining traction, offering a fresh alternative for capital formation in the digital age. The core concept of ICM revolves around the idea of democratizing access to investment opportunities. For decades, early-stage investing was largely the domain of accredited investors and established financial institutions. This exclusivity often meant that many promising projects struggled to find initial backing, while everyday individuals were locked out of potentially high-growth opportunities. ICM challenges this status quo by utilizing digital tokens to represent stakes or utility within a project. These tokens can be offered to the public, allowing a more diverse group of supporters to contribute capital and become part of a project's journey from its inception, fostering a sense of community and shared ownership. This direct-to-investor model can significantly speed up the fundraising process for innovative ideas. At the heart of ICM is the process of tokenization. Startups create their own unique digital tokens on a blockchain. These tokens can serve various purposes. Some might represent a share of future profits or a stake in the governance of the project, similar to traditional equity. Others might grant access to specific products or services offered by the platform, acting as utility tokens. The creation and distribution of these tokens are managed through smart contracts, which are self-executing contracts with the terms of the agreement directly written into code. This technological underpinning provides transparency and automation to the fundraising and token management process, reducing the need for intermediaries and their associated costs for early-stage companies. The initial offering of these tokens often occurs directly on a project's website or through specialized launchpad platforms built for this purpose. This direct engagement allows projects to build a community around their offering from day one. Investors, in turn, can acquire tokens with the expectation that their value will increase as the project develops and gains traction. This model fosters a closer relationship between the creators and their backers. The transparency of blockchain transactions also means that the flow of funds can be more easily tracked, although this doesn't inherently guarantee a project's success or legitimacy. It simply provides a different framework for how capital can be raised and deployed in the modern internet era. Tokenization is the foundational pillar upon which internet capital markets are built. It transforms rights, assets, or utility into digital tokens recorded on a blockchain. For a startup, this means they can design a token that encapsulates a specific value proposition. For example, a token might give holders voting rights in a decentralized autonomous organization, access to premium features on a platform, or even a share of revenue. This flexibility allows for creative fundraising models tailored to the specific needs and goals of each project. By issuing tokens, companies can tap into a global liquidity pool, bypassing many of the geographical and regulatory hurdles associated with traditional capital markets, making funding more accessible for novel ideas. A fascinating and often crucial mechanism in ICM for initial price discovery and liquidity management is the bonding curve. A bonding curve is essentially an automated market maker, managed by a smart contract that defines a mathematical relationship between a token's price and its supply. When someone wants to buy a new token, they send a collateral currency to the smart contract, which then mints new tokens and sends them to the buyer. The price paid per token increases as more tokens are minted. Conversely, when someone sells tokens back to the smart contract, the tokens are burned and the seller receives the collateral currency, with the price per token decreasing as the supply shrinks. This creates an instant market and provides liquidity from the very first transaction. The bonding curve mechanism ensures that there's always a buyer and seller for the token, at least through the smart contract itself, as long as there is collateral in the contract. This is particularly useful for new projects that don't yet have the trading volume to be listed on major exchanges. The price automatically adjusts based on demand, providing a transparent and predictable pricing model, at least in theory. Early investors who buy when the supply is low get a lower price, incentivizing early adoption and support. However, this also means that later investors pay progressively more, which can create its own set of speculative dynamics and risks, if not well understood by participants in the market. Once tokens are distributed, whether through a bonding curve sale or other initial offering methods, they often find their way to decentralized exchanges, commonly known as DEX. Platforms like Uniswap, SushiSwap, or PancakeSwap allow for permissionless trading of these tokens. Users can swap one cryptocurrency for another directly from their wallets, without needing a central intermediary to hold their funds or approve trades. Liquidity on these DEX is typically provided by users themselves, who deposit pairs of tokens into liquidity pools. In return, these liquidity providers earn trading fees. This decentralized trading environment further enhances the accessibility and global nature of ICM, allowing tokens to be traded 24/7 by anyone, anywhere. Several platforms and tokens have showcased the potential of ICM-like mechanisms. For instance, projects launching through initial DEX offerings on platforms like Polkastarter or Day Maker have raised significant capital by offering tokens directly to a decentralized community. Even earlier concepts like initial coin offerings, despite their mixed reputation, were a precursor to the more refined ICM models we see today. Successful tokens often exhibit strong community backing, a clear use case, and robust tokenomics. For example, governance tokens for popular DeFi protocols, which often started with community distributions or fair launches, have become highly valued, demonstrating the power of community-driven capital formation and decentralized ownership. These successes highlight how ICM can fuel innovation rapidly. The popularity of internet capital markets is driven by several compelling factors. Firstly, there's the unparalleled speed and efficiency. Startups can launch fundraising campaigns and access capital in a fraction of the time it takes through traditional routes. Secondly, the global reach is a massive advantage. Projects can attract investment from a worldwide audience, not just from local venture capitalists. Thirdly, the lower barriers to entry benefit both startups, which might lack the connections for traditional funding, and smaller investors who can participate with relatively small amounts of capital. The transparency of blockchain transactions, while not a panacea for risk, also appeals to a digitally native generation comfortable with open ledger technology. However, the future of ICM is viewed through both optimistic and pessimistic lenses. Optimists see it as a revolutionary force that will democratize finance, empower innovators, and unlock new forms of value creation. They believe ICM can foster more community-centric projects and allow for more equitable wealth distribution. The potential for rapid innovation, unconstrained by traditional gatekeepers, is a powerful draw. They envision a future where almost any asset or idea can be tokenized and funded through these global open markets, leading to an explosion of creativity and new business models that we can barely imagine today. This perspective champions the freedom and accessibility that ICM offers. Conversely, pessimists point to significant risks and challenges. The space is rife with scams, rug pulls, and projects with little substance, leading to substantial investor losses. Regulatory uncertainty looms large. Governments worldwide are still grappling with how to classify and regulate these new digital assets and fundraising methods. The high volatility of crypto assets adds another layer of risk. Furthermore, the lack of investor protections common in traditional markets means that participants often have little recourse if things go wrong. There are concerns that the ease of raising capital can sometimes lead to poorly thought-out projects receiving funding, creating market noise and diluting genuine innovation. One of the most exciting potential impacts of internet capital markets extends beyond purely digital projects to the tokenization of real-world assets. Imagine being able to buy and sell fractional ownership of real estate, fine art, or even equity in private companies, all represented as tokens on a blockchain. ICM infrastructure could facilitate this by providing a global liquid market for assets that are currently illiquid and difficult to trade. This could unlock trillions of dollars in value, making these asset classes accessible to a much broader range of investors. The transparency and efficiency of blockchain-based settlement could also streamline ownership, transfer and management for these tangible assets. For individuals looking to profit from the ICM trend, several strategies exist, though all come with inherent risks. Early investment in promising projects during their initial token offerings can yield significant returns if the project succeeds. But this requires careful due diligence to identify legitimate ventures with strong fundamentals. Participating in liquidity provision on decentralized exchanges can generate fee income, but this also exposes investors to impermanent loss. Staking tokens, where users lock up their tokens to support network operations or governance, can also provide rewards. Understanding a project's tokenomics, how its tokens are created, distributed, and used, is crucial for assessing its long-term value potential. Thorough research is absolutely paramount. The transformative potential of ICM is undeniable. It is fundamentally altering how startups access capital and how individuals can participate in early-stage ventures. It fosters a more direct connection between creators and their communities, potentially leading to more aligned incentives. However, for ICM to achieve sustainable growth and mainstream adoption, regulatory clarity is essential. Governments and regulatory bodies need to develop frameworks that protect investors and ensure market integrity without stifling innovation. This is a delicate balance, but one that is necessary for building trust and confidence in this burgeoning ecosystem, paving the way for more mature market structures. Ultimately, the future of internet capital markets appears bright, albeit filled with challenges that need careful navigation. The evolution of this space will likely involve improved security measures, more user-friendly platforms, and more sophisticated governance models for tokenized projects. For investors and entrepreneurs alike, ICM offers exciting new possibilities. However, it's crucial to approach this domain with a healthy dose of caution, a commitment to thorough research, and an understanding of the risks involved. The ability to innovate in fundraising is powerful, but it must be matched with responsibility and a focus on building real, sustainable value for all participants involved in this new financial frontier.